webinar, that is 9th study circle on the relevant topic of the time, that is Direct Tax Vivad Se Vishwas Act 2020. Very eminent faculty, Advocate Dharan Gandhi, has gracefully accepted our invitation and he is going to educate us on the interesting topic. Uh, Before that, I would request our Secretary Jitendra Pulia to formally introduce today's faculty. Jitendra bhai, please.
Jitendra bhai, your voice is not audible. Hello?
You are not audible, Jitendra bhai. Can anyone? Jitendra bhai? Usual, can you assign to anyone who is? You are not audible, Jitendra bhai.
Jitendra bhai, can you mute? Unmute? I think we have lost him.
He's there, he's connected, but it's technical hitch.
Yes.
Usual, can you help?
Yes.
Please.
Jitendra bhai, can you remove your headphones? Or I shall go. So shall I take up
Yeah, please,
the
please.
introduction?
Yeah, please.
Yes. Friends, it is my pleasure to introduce Dharan Gandhi, the speaker for today. He has been a past colleague. We have worked together on few assignments. Uh, a very knowledgeable person. Personally, I am sharing uh, right up to the mark with precise knowledge of the section. I would like to give a brief introduction, though his profile is very big. Uh, he is the co-author of the book Treaty on Vivad Se Vishwas in the FAQ format. Uh, he practices as an advocate before the Bombay High Court, CIT and DRP, and specializes in corporate tax, international tax, and transfer pricing litigation. He was a junior to Advocate Hero Rai and also acquired training in his chamber for around 6.5 years. Uh, for a brief period, he has worked with Advaita Legal, a law firm associated with KPMG. Uh, he was part of the team representing Chamber of Tax Consultants in the petition challenging ICDS before the Delhi High Court. Uh, in the petition, CBDT Central Action Plan giving incentives to CAIT before the Honorable Bombay High Court. He is currently the chairman of Commercial and Allied Law Committee of the Chamber of Tax Consultants for the year 2020-21, and he also a member of Committee of WIRC of ICAI for the year 1920 and convener of the Direct Tax Committee of the Chamber of Tax Consultants for the year 2017-18 till 2000 year 1920. He has also written various uh, articles and uh, also co-authored the following books: Section 56 to 10, Treatise and Interpretation of Statutes, FAQs. On academic front, he has secured 7th rank on all India basis in the CA final exam and 38th rank on all India basis in the CA PCC examination. With this very brief profile, I would like to hand over to the speaker for today. But before that, I think the president would like to hand over a memento.
Yeah, on behalf of all and Malad Chamber, I would offer this memento. I will have it delivered to uh, Dharan Sir's chamber. Now, I request Dharan Gandhi to start your presentation. We are very eager to listen to you, sir.
Thank
Thank
you.
you. Thank you for
Thank you,
accepting our
Ujjwal,
invitation.
for a brief introduction. Is my share screen visible?
Yeah, yes, sir.
Yes.
Visible? Yes. Okay. Okay. So, firstly, let me thank the Malad Chamber of Tax Consultant, the President Prajapati sir, and the other office bearers for inviting me for to share my thoughts on this issue of direct tax Vivad Se Vishwas. The scheme of Vivad Se Vishwas had gathered much attention in the month of February and March. This was announced in the budget of 2020 by Honorable Finance Minister, and so it was a much looked after scheme at that point of time. However, there was a delay in execution of the scheme as well as the pandemic. This resulted in the complete postponement of the scheme to July and June and then December. Plus, what has happened is because of this pandemic, many SSCs have faced financial difficulties, and therefore it is not possible for the SSCs to settle their appeals and make payment of taxes under the scheme. So, as a result of all these problems, number of amendments have been carried out in the scheme to extend the due dates. Now, as everybody is aware, the last date to file the application under Vivad Se Vishwas is for 31st of December 2020, and to make payment without any extra charges, the last date is 31st of March, and from 1st of April one can make payment after paying something extra, that is 10% or whatever it is. Last day to make the payment, last day to file the form is 31st December, which is 1 month from now. And to just make the members aware, 31st December is also the due date for filing of your Form 3CD reports. Also, it is the last date for filing of your annual GST annual returns. So therefore, there is a clash of three due dates, and one will have to look into how to manage things in this regard.
આવ્યો ઓડિયો
Am I audible?
તમારો જ નતો અવાજ.
Yes, yes.
Yes. So today's presentation is divided into three parts. First, I'll deal with the basic provisions of the Vivad Se Vishwas. Secondly, I'll deal with the issues which, from my side, there are various controversies which still exist, which I'll discuss. And lastly, the queries from the participants, if there are any. I think there will be many queries because there are a lot of execution issues. With this, let us start with the background. This was announced in the budget of 1st February. Vivad Se Vishwas means from dispute to confidence. So you settle your dispute, pay taxes, and build confidence. Earlier schemes were there, similar schemes were there, like Kar Vivad Samadhan scheme of 1998 and Direct Tax Dispute Resolution scheme of 2016. If you see the Kar Vivad Samadhan scheme, similar scheme was there. It was challenged by All India Federation of Tax Practitioners in the Delhi High Court and the Supreme Court, saying that you cannot come out with such kind of amnesty schemes. And the Union of India, that is the central government, had in an affidavit given an undertaking that in future years will not come out with any amnesty scheme. So that promise is no longer valid because they have come out with a lot of amnesty schemes, starting with the Black Money Act, Black Money scheme, then the Income Disclosure scheme, and now the Vivad Se Vishwas scheme. Of course, this is in the nature of amnesty scheme because you are not required to pay your interest penalty, you are only required to pay your tax. And in case of penalty appeal and interest appeals, you are only required to pay 25% of the amount. Plus, you are free of your penalty and prosecution. So, this is absolutely in the nature of amnesty scheme. Vivad Se Vishwas Act is a separate act and not a part of Finance Act. In the starting period, that is in February, March, there appeared to be two objectives behind coming out with this scheme. First was, to enable government to mop up revenue because in the fiscal year 1920, there was a lot of, there was a huge deficit and the government come out with the scheme. The last date to make payment without any additional charge was 31st of March. So they were hopeful that, before 31st of March, they would be able to collect a lot of revenue. Unfortunately, because of the pandemic, the entire scheme went dowry and this was postponed. So the first objective is to collect revenue and the second objective is to reduce litigation at various forums. There are about 4.83 lakh appeals pending. There were, in fact, at the point of time when the scheme was introduced, in February 2020. And also, they had come out with a similar scheme in last year in respect of indirect taxes. But what has happened in indirect taxes is that they have moved from central excise service tax VAT regime to GST era, and therefore they wanted to close all the old disputes and offered assessee the scheme to come out of all the disputes. So that was a very successful scheme, but here the success depends upon various other factors, because here you're not coming out with a separate act. There's only one income tax act. First draft of bill was introduced on 4th of February. However, no, let me just clarify at this stage that the drafting of the government has taken a downward trend, very poor drafting. They have to come out with a lot of clarifications. Similar experience was faced in case of Vivad Se Vishwas bill. The first draft, which was introduced on 4th of February, had lot of issues, lacunas, problems, and therefore various representations were made, and as a result they had amended substantially the bill. Like, in fact, come out with a separate new bill itself, which was finally enacted on 17th of March 2020. Success of the scheme will depend upon the following. We are aware that in the income tax department is known for passing high pitch assessment orders. The AOs have passed various high pitch orders. The quality is lacking. There is no genuine or addition made. Of course, you cannot blame the AO because they have been saddled with lot of demands and targets. So if the addition is an high pitched one, then assessee is not going to settle it under the Vivad Se Vishwas scheme. If addition is a bogus addition, then assessee is again not going to settle under the Vivad Se Vishwas. Two, we are also, success of the scheme will also depend upon the clarifications which is issued by the department from time to time. The first set of clarifications were issued before even the act was passed. That is on 4th of March that issued the clarifications. There were about 55 clarifications. In spite of this 55 clarifications, there are a number of other issues which have cropped up, and which we'll discuss in in today's talk. But after the first clarification, there is no other clarification which has been issued, in spite of the fact that there is a time gap of about 8 months. So there are a lot of issues which are still pending, and people are not able to get solutions for them. These are the relevant act, rules, and notifications in respect of Vivad Se Vishwas Act. The first is the act, then the second is rules. Then there were about two notifications were issued. Then there is a taxation and other law, taxation and amendment of certain provisions Act 2020, which has extended the due date because of this pandemic. Then there are various circulars and instructions issued how to file a form, FAQs, and circular number 7 and circular number 80. With this, we go to the scheme per se. Firstly, the first important question is who may apply under the scheme, or which matters may be settled under the Vivad Se Vishwas Act. The term appellant has been defined in section 21A of the Vivad Se Vishwas Act. All your appeals which are pending before the CIT appeal, ITAT, High Court, or Supreme Court. All your writ petitions which are pending before High Court, Supreme Court, and all your special leave petitions which are pending before Supreme Court. Such appeals, writ petitions, special leave petitions should be pending as on 31st of January 2020. Mind you, these appeals should be pending as on 31st January 2020. These appeals may have been filed by assessee, it may have been filed by the department, or both. All such appeals, writ petitions, special leave petitions are eligible to be settled under this. 2. Now, what would happen is, say for example, if the assessment order is passed in December, which copy of which has been received on 5th of January, time limit to file appeal to CIT appeal is not expired as on 31st January. You were thinking of filing an appeal in first week of February. So what has happened is, or for example, CIT may have passed the order, say for example, on 25th of December. Time limit to file an appeal to ITAT has not expired on 31st of January. So all cases where time limit to file an appeal, writ petition, or special leave petition has not expired as on 31st January 2020, all such cases are also covered under this. In case of international tax and transfer pricing matters, instead of going to CIT appeal, there is another route made available under the Act under section 144C, which is dispute resolution panel. So therefore, all the cases which are pending before DRP as on 31st January 2020 are also covered under C. And in case where DRP is already passed the order and AO is to pass the final assessment order, but such order is pending as on 31st January 2020, even such cases can be applied or settled under the C. Lastly, instead of choosing the appeal remedy, one may choose revision remedy available under Section 264 of the Act. One may file a revision application to Commissioner under Section 264. Even such applications which are pending as on 31st January 2020 can be taken under this. So these are all the cases which can be settled under the scheme. Section 9 deals with the cases or which deals with types of appeals which cannot be settled under the scheme. The first is in relation to a particular appeal where an assessment is made either under Section 143(3), 144, 153A, or 153C of the Income Tax Act on the basis of search carried out under the Income Tax Act. So, what happens in case of search is after the search is completed, there are assessments under Section 153A in case of the party search for 6 years preceding the assessment year, relevant to the previous year in which search has been carried out. And also the year of search, the assessment is made under Section 143(3) or 144 of the Act. So there are total seven assessments made in respect of a search case. Similarly, where any information is found regarding a third party, then assessments can be carried out in respect of third party under 153C of the Act. Similarly, for 6 years preceding the previous year search has taken place, and for the year of search. So in all, total 7 assessments are made. Such 7 assessments, search assessments, which are made on the basis of search initiated under the Income Tax Act, would be outside the ambit of the Vivad se Vishwas Act if the disputed tax exceeds rupees 5 crores. So, for example, after the 7 assessments which has been made under the 153 and 143 of the Act, 3 assessments includes disputed tax of more than 5 crores. So you have to exclude these 3 cases. Balance 4 cases one can settle under the Vivad se Vishwas Act. So this limit of 5 crores is qua an assessment made on the basis of search. So this is the first exception, search case where the disputed tax exceeds 5 crores. The second exception is in respect of prosecution, a case where a prosecution has been instituted on or before the date of filing of declaration. So a prosecution under the income tax has been instituted. That means a complaint has been filed against the SSE before the magistrate court. Till what time? Before the date of filing of declaration. So for example, you are thinking of filing a declaration on 24th of December. But on 20th of December 2020, the department has already launched a complaint against you before the magistrate courts. That's the end of the matter. You cannot come under the scheme. Similarly, any undisclosed income from a source located outside India or undisclosed asset located outside India. So all the assets and income which are covered under the Black Money Act, in respect of such undisclosed income and undisclosed asset, you cannot make a declaration under the scheme. Also, an assessment which is made based on the information received under an agreement referred to in Section 1990 cannot be covered under the scheme. And there are few other exceptions in respect of prosecutions carried out under IPC or some other code. The first one is a prosecution which has been initiated by Income Tax Authority under the Indian Penal Code for enforcement of any civil liability. So this exception applies in a case where the Income Tax Authority has filed a complaint against an assessee under IPC, Indian Penal Code, not under the Income Tax Act, for enforcement of any civil liability. Similarly, that if you are convicted under the COFEPOSA Act, Conservation of Foreign Exchange and Prevention of Smuggling Act, or against which a prosecution has been launched or has been convicted for any offense under Narcotic Act, Corruption Act, Money Laundering Act, Benami Property Act, and lastly, Special Court Trial of Offences Act, then in such case, one cannot file a declaration under this Vivad se Vishwas. So we have just discussed the cases which are eligible to be settled under the scheme and the cases which are specifically excluded. The next item which we will discuss is the meaning of the term disputed tax, disputed fee, disputed interest, and disputed penalty. So that is how much amount one has to pay under this act will depend upon your disputed tax, interest, fee, and penalty. First is the term disputed tax is defined under Section 21J of the Vivad se Vishwas Act. So different scenarios are contemplated where one can file a settlement under Vivad se Vishwas Act. Similarly, for such different type of scenarios, different computation provisions are envisaged for computing your disputed tax. So if in respect of any appeal or writ petition or special leave petition which is pending on 31st of January 2020, disputed tax would be computed as if your appeal is not going to be allowed or it's going to be decided against. So all the issues which you have raised in the appeal, if they're going to be decided against you, how much tax you're supposed to pay, that is the amount of disputed tax. In case where time limit to file an appeal, etc., is not expired on 31st of January 2020, in such case, to compute your disputed tax, the same will be computed by giving effect to the assessment order or the appellate order against which the appeal time limit to file appeal is not expired. So, for example, in your case, an assessment has been completed, time limit to file appeal has not expired on 31st January 2020. Then the amount of disputed tax would be the disputed tax as per the assessment order. Similarly, say for example, if a CIT appeal has passed an order and the time limit to file an appeal to ITET has not expired, then to compute the disputed tax amount, the disputed tax would be the amount of tax payable by the appellant with respect to the order giving effect to CIT appeal order. After giving effect to the CIT appeals order would be the disputed tax amount. In case if your objections are pending before DRPS on 31st January, then the disputed tax would be computed as if such objections were to be confirmed or were to be disallowed by the DRP. If the DRP has already passed the order and AO is to pass the final order, in such case, the disputed tax will be computed as if the final order has been passed or as per the final order to be passed. In case of a revision application under section 264 is pending, then the disputed tax will be computed as if such application is going to be decided against the assessor. Now, in all these cases, there may arise a case where your loss of a particular year is disallowed. Now, in case of a loss, you cannot compute your disputed tax as per point number 1 to 5. So, in case of loss, they have given two separate options. In case of reduction of loss, reduction of depreciation, or reduction of tax credit under section 115JAA or JD. There are two options. The first option is either you pay tax on such loss or depreciation, etc., in this year and then carry it forward in subsequent years, or you don't pay tax in this year and don't carry it forward in subsequent years. So there are two options given to the assessee, and the assessee can select any of the options. The tax amount will of course include surcharge and cess. It will be without any interest. Now, if your appeal is pending before CIT appeal, then the CIT has a power to enhance your appeal or assessment. If such enhancement notice is received by an assessee prior to 31st January 2020, then the tax amount on such issue in respect of which enhancement notice is issued will be added to your disputed tax. Earlier, in the earlier draft, wherein an enhancement notice was issued by CITFP, such cases were excluded from the ambit of Vivad se Vishwas Act. However, now they have included such cases, but they say that, oh no, we will include these cases, but we have to add the tax amount on such enhancement notice to a disputed tax amount. So what do you mean by enhancement notice issued by CITFP? A mere oral threat is not an enhancement notice. A proper show cause notice issued by CIT appeal as to why enhancement should not be made in respect of so and so issue is considered to be an enhancement notice. If there is no such enhancement notice issued before 31st of January 2020, then in such case, one cannot say there is an enhancement notice pending, because it requires a formal notice and it cannot be a mere oral threat. Now, the disputed fee, disputed interest, and disputed penalty are defined in section 21F, 21H, and 21I. Disputed fee means the fee, 234E and 234F are the sections under which fees are levied on the assessee. Now, if you look at all three definitions, one phrase is appearing to be common, which is in respect of which an appeal is filed by the appellant. Even in case of disputed interest and disputed penalty, they have used the word in respect of which an appeal is filed by the appellant. Does that settle any appeal pertaining to a disputed fee or interest or penalty? An appeal should be pending before an appellate authority, because if you remember, we have just discussed the meaning of the word appellant. An appellant includes cases where time limit to file appeal has not expired, or where a revision application has been filed, or where the matter is pending before DRP. And not only cases in respect of which an appeal is pending before appellate court. So they have used the word in respect of which an appeal has been filed by the appellant. However, they have thereafter clarified in the circular that disputed fee, interest, and penalty will also include cases where either appeal is pending, appeal is yet to be filed, time limit is not expired, or cases which are pending before DRP or in a revision application. So disputed fee is a fee which has been levied on the SSC under the Income Tax Act. Similarly, disputed interest and penalty means the amount of interest or penalty which has been levied under the Income Tax Act on an SSC. However, mind you, interest and penalty in respect of any quantum addition and the quantum appeal is pending before an appellate forum. In such case, the interest and penalty on such quantum appeals pending cannot be considered as disputed interest or disputed penalty. To give an example, an addition has been made by the assessing officer. You have filed an appeal to CIT appeal. CIT appeal confirmed. You have filed an appeal to IT appeal. In the meanwhile, the AO has levied penalty, and the penalty order is challenged by the SSC before the CIT appeal. So there are two appeals pending. One is a quantum appeal pending before ITT, and one is penalty appeal pending against the 271 1C order or 270 capital A order before the CIT appeal. Such penalty which is pending before CIT appeal cannot be considered as disputed penalty because it is pending in relation to a quantum appeal which is still pending. Look at the meaning of the word disputed interest and disputed penalty. Disputed interest means the interest determined in any case under the provisions of the Income Tax Act, where such interest is not charged or chargeable on disputed tax. We have already seen the term meaning of the term disputed tax. Disputed tax is a case where either appeal is pending, or appeal has proposed appeal is pending, proposed appeal is there, or where DRP is pending, or where revision application is pending. So in all such cases where quantum issue is pending, interest on such quantum issue cannot be considered as disputed interest. Similarly, disputed penalty means penalty determined in any case under the provisions of the Income Tax Act, where such penalty is not levied or leviable in respect of disputed income or disputed tax. So if such penalty which is not levied or leviable in respect of disputed income, so if it is in relation to a quantum appeal which is pending, then the penalty in relation to such quantum appeal cannot be considered as disputed penalty, meaning thereby you cannot merely settle your interest and penalty appeal without settling your quantum. What amount one has to pay under the provisions of the Vivad se Vishwas Act is given in section 3 of the Act. If it is settlement of any quantum appeal not relating to any search issue, and if the payment is made up to 31st of March 2021, you have to pay 100% of your disputed tax without any interest or penalty. So pay tax, forget interest, forget penalty. If it is paid after 1st of April 2021, you have to pay 110% of your disputed tax without interest or penalty. So if you pay after 1st of April, then 10% more you have to pay. If the tax area relates to any search action under the income tax. Now, we have seen search cases are excluded from the purview of Vivad se Vishwas Act, but only those cases where the disputed tax is more than 5 crore. So, in case where assessment is made based on the basis of a search initiated under the Act, classify into two categories. First is where the tax amount is more than 5 crores. Such category of cases are outside the ambit of Vivad se Vishwas Act, you cannot settle. The other category, which is the tax effect is less than 5 crores. Such assessments can be settled under the Vivad se Vishwas Act. If you want to settle such appeals or such assessments, then you have to pay 125% of the tax amount. If it is paid before 31st of March, if it is paid after 1st of April, you have to pay 135% of the tax amount. When you are settling an appeal in relation to the interest fee or penalty, you have to pay 25% of disputed interest fee or penalty if it is paid before 31st of March. And if it is paid after 1st of April, then you have to pay 30% of the disputed interest fee or penalty. Last day to file declaration is 31st December, but last day to make payment. So the third column, which is amount payable on or after 1st of April, but till what date they are yet to specify. In some cases, there is some benefit given to the SSC. For example, your appeal is decided in your favor by CIT appeal. Now the department is in appeal before the tribunal. As on today, department's appeal as on 31st January is pending before the tribunal. If you look at this department appeal, you are not required to pay any amount, interest or penalty, because the issue is decided in your favor by CIT. Why will one settle an appeal? where one is required to pay 100% of the tax amount, even in case of department. Or take a case where the issue in respect of which an addition has been made is covered in the favor of assessee by the order of the very same assessee for the earlier year by the order of ITAT or High Court. So, for example, an addition has been made under Section 14A. Only issue is 14A addition. Appeal is pending before CIT appeal. But the very same addition of 14 on the very same fact is covered in favor of the assessee by the order of ITAT or High Court. Why will one settle the appeal and pay 100% tax? Because you're anyways going to get relief at the higher appellate court. So in such cases, the department has given some benefits. They say in case of a department's appeal or a proposed department appeal, or in case where appeal is filed or yet to be filed before CIT appeal or DRP, and the issue is covered by the decision of ITAT or High Court, or where the appeal is pending before the ITAT and the issue is covered by the decision of the High Court, then in such cases, you have to pay only 50% of the amount specified in the table. Mind you, in the item number 2 and 3, you are required to pay 50% of such amount qua such issue. So, for example, if there are two issues, only one issue is covered, then only qua such issue you have to pay 50%. On the other issue, you have to pay 100%. Rule 11 of the Vivad se Vishwas rule provides a mechanism to find out the amount payable if your issue is either covered in your favor by the order of the higher appellate forum or where it's a department appeal. They say you compute your normal disputed tax as if it is your appeal, multiplied by issues in respect of which it is covered in favor of the declarant upon total income in respect of all the issues. That is how one has to apply Rule 11. Now we come to the next aspect of loss, depreciation, and MAT credit. We have just discussed that in case of loss, disallowance of carry forward or loss of depreciation or MAT credit, you have been provided with two options. You either pay tax in this year and carry forward the loss or depreciation subsequently, or you either don't pay tax in this year and don't carry it forward. So there are two options available. If you look at the first option, you have to pay tax including surcharge and cess on such amount of loss or depreciation which has been disallowed. Normal assessment case, 100% if paid up to 31st of March, 110% if paid after 31st of March. In case of surge cases, you have to pay 125% or 135%. In case where it is department's appeal, you have to pay half the amount of disputed tax. And in case if the issue is covered in favor of the assessee by higher appellate forum's authority order, then again you have to pay half the amount. So this is where you choose the option of paying tax in the year in which it has been disallowed. The second option is you don't pay tax today and you don't carry it forward. If this option is selected, what will happen? In subsequent year, if you have set off this loss, then in subsequent year that set off will not be allowed to you. As a result, demand will arise. And on that demand, there will be interest liability also. So if this option is selected, you have to pay tax in subsequent year whenever it has been set off along with interest. Secondly, say for example, in case a depreciation has been disallowed to you. So in such case, if you select this option of reduce carry forward to next year, then the rule provides that the block WDV will not be increased. Now this is absurd. The block WDV has to be increased. If you don't allow depreciation, the net effect is my WDV will increase. So this is an absurd provision which they have introduced. Now how to compute the loss which cannot be carried forward to next year, because this option says you don't pay tax in this year, also you don't set off in subsequent. Now how much loss is not allowed to be set off in subsequent? In normal cases, your entire loss or depreciation which is disallowed by AO cannot be set off. What will happen in surge cases? Because in surge cases you are required to pay 25 or 35% more. There the provision says that, the rule says that your 125% of the loss shall not be allowed to be carried forward, provided such loss has been carried forward. So to give an example, you had carried forward a loss of 150. In the assessment, AO says 100 loss is bogus, I will not allow you 100 ka loss. It's a surge case. As per the rule, for subsequent year, 125% of the loss is not to be allowed. 125% of your loss not allowed is 100 ka 125%, which is 125. So total loss is 150. Since you're carrying forward 150, AO will disallow 125% of your 100 loss, that is 125 next year. Take a second example. Total loss which you have carried forward is 110. AO disallows a loss of 100. It's a search case. You select this option of reduce carry forward in next year. So total loss to be disallowed is 125 of 100, which is 120. However, loss which you are actually carrying forward is 110. In such case, AO will disallow loss of 110 in next year. Similarly, in case of department appeal and covered issues, only 50% of the loss will not allowed to be carried forward. And in case of search cases, where it's a department appeal or covered issue, 5/8 of the loss or depreciation will not be allowed to be carried forward. What is the procedure for filing of declaration under Vivad se Vishwas Act? First step is to file a declaration in form number 1 along with a declaration in form number 2. The last day to file such declaration is 31st December 2020. It's a big form. You have to fill in a lot of details in form number 1. And form number 2 is an undertaking that in respect of the issues which you are going to settle under the Vivad se Vishwas Act, you're not going to litigate it further. The next step is within 15 days from filing of this form, the designated authority has to issue a certificate in form number 3. He will verify your form, he will verify the assessment records, and he will determine what amount is payable by a person, and such amount will be quoted in form number 3. Once this certificate in form number 3 is issued, all the appeals pending before ITAT and CIT appeal shall be deemed to be withdrawn from the date on which such certificate is issued. Now, this time limit of 15 days was granted to the department for issuing Form 3. However, what has happened in the pandemic time, they were not able to issue any forms because of shortage of staff and because of natural reasons. As a result, this time of 15 days has been extended till 31st of December 2020 by the Taxation and Other Law Relaxation and Amendment of Certain Provisions Act. So the all the due dates were extended. Even this due date of 15 days was extended till 31st December. Many people would be wondering that I have already filed in June and I have not received Form 3, though 15 days time has expired. This is because they have extended the due date to issue Form 3 till 31st of December. Once you receive this Form 3, you have to make payment of tax. Earlier, the time limit to make payment of tax was 15 days from the date of receipt of certificate, but this has now been relaxed. You can make payment up to 31st of March without any extra payment, and after 1st of April with the extra payment which we have just discussed. After making payment, you have to intimate the details of such payment in form number 4 to the department. Everything has to be filed online. Also, at this stage, you have to also initiate process for withdrawing your appeals before High Court or Supreme Court. You have to withdraw the appeals and attach the proof of such withdrawal along with your form number 4. If you're not able to withdraw the appeals within the time limit and you're not able to upload form number 4, then what you can do is you can make an application for withdrawal and attach proof of such application for withdrawal. No need for you to pursue this withdrawal thing, because you can also attach the proof of such application. Once you have filed form number 4, the department will issue form number 5, wherein they will give details of the appeals or issues which have been settled, and they will state that you are granted immunity from any interest, penalty, or prosecution in this regard. If any material is found to be false at any stage, or if you violate any of the conditions, or you don't act in the manner in accordance with the undertaking which you are giving, then in such case your declaration will be treated as null and void, and all the proceedings which are pending before any court shall be deemed to have been revived. What will happen is, in most of the cases, the additions are made year on year. In 1 year, you may settle it. That does not mean that you have conceded the tax position. Settlement will not amount to conceding tax position. Still, in the subsequent years, the department cannot say, नहीं आपने ये साल में settle किया, मतलब आपने accept किया. That is not possible. What is the benefit or immunity which one is getting? You are safeguarded from any prosecution case. You are not saddled with penalty, and you are not charged with any interest. So this is the benefit which you are receiving. The section 7 of the Vivad se Vishwas Act states that any refund, if you pay any amount under this act, you shall not be granted any refund. if your application is treated as bad or treated as null and void, you will not be granted any refund. So this is, there in all the amnesty schemes. It's a common provision. Now what will happen is, under this scheme, you are required to pay only the tax amount without any interest and penalty. However, when a demand is raised on the assessee, some assessee pays the entire demand. If entire demand is paid, then you also paid the interest amount. Now, if you settle it under the Vivad se Vishwas Act, you are required to settle it for only tax amount and not the interest amount. Therefore, you are eligible to a refund to the extent of interest amount. Or take a different case. You have paid the entire tax on the additions made. CIT appeal is in your favor. Department is appealed before the tribunal. No refund has been granted to the assessee. You want to settle this appeal. You have to settle this appeal on payment of only 50% of the tax amount. You have already paid full tax along with interest. Therefore, once you settle it under the scheme, you are eligible for a refund of the balance 50% of the tax amount plus interest. Earlier, there was no provision for refund, but now they have made a specific provision that if you already paid the entire tax earlier along with the interest, etc., then in such case, if your amount payable under the Act, Vivad se Vishwas Act, is a lesser amount, you shall be entitled to a refund of such excess amount, but without any interest under Section 244A of the Act. So the provision for refund has also been made. So these are the basic provisions of the Act, Vivad se Vishwas Act. Now there are various issues which are arising under the Vivad se Vishwas Act, which I shall be discussing now. Firstly, we have seen the meaning of the term appellant. Appellant means a person in respect of whom an appeal is filed and pending as on 31st January 2020. Now, in many cases, what has happened is the appeal has been filed belatedly before any appellate authority. Though it is pending as on 31st January 2020, but it is filed late. Can such appeals be treated as an appeal pending as on 31st January? Of course, the natural answer is yes. One may think, no, appeal is pending, though late. However, why this question? Because the provisions of the Income Tax Act states that till the time delay is condoned, appeal cannot be said to be admitted. If appeal cannot be said to be admitted, then the department may tomorrow argue no appeal is pending and therefore you cannot apply under Vivad se Vishwas. So therefore, this is the issue which is arisen. The answer to this question is, if you have filed an appeal, though belatedly, pending as on 31st January, it is an appeal pending and you can settle under the scheme. And we have a judgment of Telangana and Andhra Pradesh High Court in this context, though in context of Kar Vivad Samadhan scheme having similar provisions, and they say that appeal filed belatedly is also an appeal pending as on 31st January and you can settle it under the Act. Second issue, time limit to file appeal has already expired as on 31st January. Say for example, you received CIT appeals order on 15th of October. Time limit to file appeal was 15th of December. 60 days. You have not filed an appeal, but there is a genuine reason for condonation of delay. As a result, you have not filed an appeal, and you have then filed an appeal, say for example, on 15th of February after 2 months delay. But you have a reason for condonation of delay. In such case, can you say that an assessee is eligible to settle under Vivad se Vishwas Act? The answer is no, because no appeal is pending as on 31st January, and you cannot settle it under the Vivad se Vishwas Act. The next question is very important. Your appeal is pending as on 31st January 2020. Either it is heard before 31st January or it is heard after 31st of January. And your appeal is also disposed of after 31st of January 2020. In such case, can you say that your appeal is pending and therefore you are eligible to file a settlement under Vivad se Vishwas Act? So why this question is important? Because earlier the time limit to file declaration for the first phase was up to 31st of March. The scheme itself came out on, say for example, 15th of February. There was a time gap of 45 days. But because of the pandemic, the entire thing got extended and postponed till 31st of December. What would have happened is, at least not a CIT appeal, but tribunal has disposed of a lot of appeals in between. So your appeal is pending as on 31st January. फिर आपने सोचा रहेगा चलो एक चांस लेते हैं, ट्राइब्यूनल के सामने वर्चुअली आर्ग्यू करके मैटर देखते हैं क्या होता है. You argued before the tribunal, you were unsuccessful. The appeal of the assessee was dismissed. Say for example, an order is passed on 31st of October 2020. अब आप बोल रहे हैं नहीं नहीं मेरा तो अपील पेंडिंग था 31 जनवरी को, लेट मी फाइल अ सेटलमेंट अंडर विवाद से विश्वास, ignoring the tribunal's order. In such case, the question is whether can you file an appeal, though pending as on 31st January, but subsequently disposed of. So it's a very tricky issue. My answer to this question would be yes, you can do it. Requirement under the scheme is appeal should be pending as on a specified date, which is 31st January. Even under the provisions of section 4 and 5, they say you file an undertaking that you will not litigate it further. So once an appeal is disposed of, I give an undertaking that I will not go to the High Court or I will not litigate it further. So there is no provision in the act which says कि नहीं नहीं एक बार dispose हो गया तो खत्म हो गया, you cannot come under the scheme. The answer is no. The answer is yes, you can come under the scheme even if it is subsequently disposed. अब इसमें क्या issue आ रहा है? Say for example, department's appeal is pending as on 31st January before ITA, disposed of by an order of tribunal on say for example 31st of October, and department's appeal is allowed by the tribunal. So now if I want to settle it, because I take a view that appeal is pending as on 31st January, I can settle it. How much tax to pay? Because as on 31st January, department's appeal is pending, I have to pay only 50% of disputed tax. But as on today, department's appeal is allowed. Therefore, can the department argue, yes, if you want to settle, you settle, but you have to pay 100% tax? So my suggestion would be that the answer is no. You don't have to pay 100%. You have to look at the status as on 31st of January 2020. If it's a department appeal as on 31st January, you have to pay only 50% tax. Also, we have seen many cases where, especially in case of bogus purchases, where tribunals have passed ex parte order. So you are not even aware the order has been passed. In such cases, you are intending to go under Vivad se Vishwas Act because you want to settle the interest, penalty, and prosecution amount. In such cases, the obvious answer is that yes, if it is pending as on 31st January, you can definitely file an application under Vivad se Vishwas Act, even if your order has been passed after 31st of January and disposed of the order. Now, I have practically heard of cases where the department has declined the Vivad se Vishwas application on the ground that your order is already passed. In such case, you are advised to file a writ petition against this order and get it challenged. Because then what will happen is either you have to, if you're not allowed to go under Vivad se Vishwas Act, then you have to litigate further. And High Court in all probability would say that if there's an option of settlement and there's an option of litigating it further, we would go with option of settlement. So, there's a chance that High Court may give relief to you and they would say that no, since the wordings of the section are that appeal has to be pending, appeal is pending, even if subsequently disposed of, don't let them litigate further, settle it off at this stage. The next issue is section 2(1)(a), definition of the appellant states that your order is passed before 31st January, time limit to file an appeal is not expired on the 31st of January. Such cases can be settled. But the wordings used are time limit to file an appeal by an assessee has not expired. So whether time limit to file an appeal which has not expired in favor of department, the department's time limit has not expired, then in such case can they go under the scheme or not? So the answer is actually the wordings are that only proposed appeal of the assessees are covered, but by way of a clarification issued in the circular, they say that no, even proposed appeal of the department is covered, you can settle it, pay 50% of tax and finish it off, otherwise tomorrow department will take it forward. Further, in case of proposed appeal, say for example time limit is expiring on 15th of February, or say for example it is expiring on 1st of March, 31st of January time limit is still there. You don't file an appeal on 31st of January because you're eligible to come under Vivad se Vishwas Act. You would never file any appeal. So to get it covered under the scheme, is it necessary that any appeal should be filed even after the time limit has expired? The answer is no. Once your time limit to file an appeal is not expired on 31st of January, you have been given with this option to settle under Vivad se Vishwas Act. You settle under Vivad se Vishwas Act. The department cannot insist नहीं बाद में तो आपको फाइल करना चाहिए था. ऐसा department cannot insist. Many times what happens before the tribunal or CIT appeal, mostly in case of tribunal, ex parte orders are passed. Then you file an MA application for recall of such order. So your appeal is disposed of. What is pending as on 31st January is the ex parte order, is the MA application for recall of your ex parte order. Technically, no appeal is pending. Can such MA application be settled under the scheme? Or what happens in case of High Court or Supreme Court, you file a review application for review of the order passed by the High Court or Supreme Court. So no appeal is pending as on 31st January, but a rectification application or a miscellaneous application or review application is pending before the appellate court. Can such application be settled under Vivad se Vishwas Act? The answer is yes, because ultimately, if the MA application is allowed, your appeal gets revived. Your appeal gets revived, then your appeal is pending as on 31st January, in which case you can very well settle. And in such case, I think the Bombay High Court has taken a view that, if MA application is not allowed to be settled, what will happen is the appeal gets revived, they will again litigate it further. Instead of that, let them settle it. So yes, your MA application can also be settled under the Vivad se Vishwas. Your wealth tax, STT, CTT equalization levy appeals, that is an appeals which are under the other direct tax legislation, are not covered, but all your appeals under this income tax act is covered, like FBT appeals, DDT, dividend distribution tax, tonnage tax appeals, and TDS appeals. All such appeals are covered. Now, in many cases, what has happened is, against the 148 notices, many SSCs have gone before the High Court and filed a writ petition challenging the jurisdiction to reopen the assessment. Whether such writ petition can be settled under the Vivad se Vishwas Act is an issue, because writ petition pending before High Court is covered under the scheme as such. The department has clarified in reply to question number 12 that such writ petition cannot be settled under Vivad se Vishwas. Now, if you see overall circular ka view is, wherever department has a chance to make an enhancement or an addition or to assess something more than what is stated, in all such cases department has said you cannot come under the scheme. So even in case of 148, there is a chance for the department to say that not only the issue in respect to which assessment has been reopened you can settle, you can make an addition, but also other issues can be added by the AO during the course of assessment proceeding. So in such case, they are saying you don't settle it. But my answer is different. According to me, even when a writ petition is pending before the High Court against the 148 notice, where even an assessment order has not been passed, it can be settled under the provisions of the Vivad se Vishwas Act by making payment of taxes on the issues in respect of which the assessment has been reopened. Your applications pending before AAR and Settlement Commission cannot be settled. However, writ filed against the decision of AAR, where tax can be determined, the department has clarified in reply to question 3 that such writ can be settled under the Vivad se Vishwas Act. But where you cannot determine the tax amount, where the issue is different, where the issue is a general issue and not a particular specific issue based on which you can determine the tax amount, in such case, you cannot file your settle your writ petition against the AAR ruling before the under the Vivad se Vishwas Act. A very interesting issue arises in respect of additional ground. Your appeal is pending as on 31st January 2021. Now, the scheme says that, say for example, 2 additions are made by the AO. One addition, you don't challenge, saying that isme to kuch hone wala nahi, you only challenge the other addition. If you settle your appeal under the scheme, your interest, penalty, and prosecution goes only in respect of the issue which you are settling. The other issue which you have accepted, in respect of that issue, you have to pay interest, penalty, and prosecution. So many people have taken this stand that do one thing, you file an additional ground to challenge the other issue also before the CIT appeal or before the appellate court. So what will happen in case of such additional ground? If it is filed before 31st January 2021, there is absolutely no issue. You can settle that additional ground also. If it is filed after 31st January 2021, it's slightly tricky issue. But my view is, if additional ground is filed, it dates back to the date of appeal. Therefore, one can say it is pending on 31st January and you can settle. In case of set aside, many times the tribunal or CITP states that the inquiry done by the AO or lower appellate authority is not proper, therefore I am setting aside the entire assessment to the lower authority. So what will happen is, if your appeal is pending before tribunal and the tribunal sends back the matter back to the AO to decide it afresh. So as on 31st January, your matter is pending before AO and not before any appellate court. In such case, can you settle your set aside case? The provisions of the Act does not allow such settlement of set aside cases. However, in the circular, in reply to question number 7 and 27, they have stated that in limited cases of set aside, you can settle your appeal. They say that if the entire assessment has been set aside, cancelled to AO for doing it afresh, then you cannot settle it because there is a chance of making an more addition. Therefore, you cannot settle such kind of set aside cases. But if any particular issue is set aside to AO, only one issue is set aside to AO out of 2-3 issues. In such cases, you can settle that appeal. Say, for example, IT80, before IT80, there were 2 issues. One issue is set aside to AO and one issue is allowed in favor of the department. And time limit to file appeal by the SSC before the High Court has not expired. Circular says that you have to settle both the issues, one which is pending before the AO and one in respect of which you can file an appeal before the High Court. In case where time limit to file the appeal to High Court has already expired, then my view is you can definitely settle the issues which has been set aside to AO. If IT80 sets aside the appeal to CIT appeal, not to AO but to CIT appeal, in such case your appeal is pending before CIT appeal and therefore you can very well settle your appeal under Vivad se Vishwas. If one issue is set aside to AO, one issue is set aside to CIT appeal, then again both the issues can be settled under Vivad se Vishwas. While filing form 1, one has to indicate that appeal has been filed to CIT appeal in respect of such set aside issue, is what has been clarified in reply to question number 7 and 27. The next important issue is revision under section 263 of the Act, which has not been clarified at all by the department. Now there are various stages of revision at which stages proceedings may be pending. After your assessment is completed, the principal commissioner may be of the view that the order is erroneous and prejudicial to the interest of the revenue. He may issue a notice under section 263 of the Income Tax Act for revising the assessment. Say, for example, your case is pending at the stage of issuance of such notice, pendency of such notice, no order has been passed. At this stage, you cannot settle your notice under section 263 because no order has been passed and no appeal is pending. Second step, one step forward, you reply to notice, CIT passes an order under section 263. Against such order, you file an appeal before the ITT, which is pending as on 31st of January 2020. Since in this case, your appeal is already pending before ITT, you can settle your appeal against the 263 order. The only issue is you have to compute the tax amount. How can you compute the disputed tax amount? If the order of the CIT is a specific order giving direction to okay, that you make addition of 2-3 issues, then you can very well compute the tax amount. If the order of the CIT is not giving any specific direction, it's a general set aside. In such case, it may be difficult to compute the tax amount, and department can take a view that in such cases you cannot settle under Vivad se Vishwas Act. However, my view is, if you are aware what quantum of addition is decided by CIT appeal or what amount has been set aside to AO, in such case you can very well compute the disputed tax amount and you can settle it. After you file an appeal, AO passes an order giving effect to the order of CIT and determines the tax amount. In such case, you can very well settle the appeal because you are very well aware what is the tax amount. And lastly, you are in appeal against 263 order as well as the order giving effect to the 263 order. Both the appeals are pending. You have to settle either of the appeal. You settle both the appeals. You pay the tax, and you can settle all the cases. You cannot settle only one of the issue in appeal. So, for example, if there are 2 grounds of appeal, you say, no, I only want to settle first ground of appeal because second ground is covered in my favor. Not possible. You have to settle both the grounds. However, if there are 2 appeals, one by SSC, one by department, for the same assessment year, you can choose to settle your appeal not to settle department settlement. So this Vivad se Vishwas settlement is qua an appeal, not qua an assessment here. Also, it may be possible that there may be various appeals pending, either against the 143(1) order or 143(3) order or 147 order. You may choose not to settle 143(1) appeal, but you may choose to settle 143(3) appeal. So you can settle either of the appeals or all the appeals, but you have to file only one form per year. Now, what are the consequential effects of the settlement of Vivad se Vishwas? You have already seen that computation of disputed tax is as if the appeal is not going to be allowed. Take a case of a chartered accountant. He accounts his income on cash basis. The one who has paid the amount or paid the fees follows mercantile system of. So, say for example, in 1920 you have raised a bill. He has deducted TDS. It is reflected in your form 26 years for 1920. You receive it in 2021. You offer to tax in 2020. AO makes an addition in the year 1920 saying it is reflected in form 26. But you have offered it to tax in second year. Now that appeal is pending. If you settle that appeal, you are paying tax on the very same income in year 1. You already paid tax on the very same income in year 2. In such cases, if you are settling the first appeal, the consequential effect has to be given in the assessment of second year, and such income has to be reduced from the income of the second year because same income cannot be taxed. Similarly, if the same addition has been made on protective basis and substantive basis, then the department has clarified that once you settle the substantive assessment, the protective assessment will go by AO passing a 154 order. If an addition has been made in respect of closing stock, up closing stock 50 lakh hai, AO ne bola nahi, we have come to your premises, we found closing stock worth rupees 1 crore. So if an addition is made in respect of closing stock, next year's opening stock would be this year's closing stock. So these are the consequential effects which one has to follow. If you have offered the income as members of AOP, but AO assesses the AOP, assessing the association of person. If you settle AOP's appeal, then necessary consequential effect should be given in individual members. Lastly, say for example, an addition has been made under section 68 of the Act in respect of unsecured loan or share capital. By treating this to be assessee's income, assessee's unaccounted money. If you settle this appeal, can you capitalize the addition? The answer is yes, because the natural consequence of your addition is that this money belongs to you, not to any other person. You can definitely capitalize the addition. Interest, penalty, and fees we have already discussed. Cases where appeal is not filed but time limit to file an appeal is not expired are also covered. One cannot settle only penalty appeal while continue with the quantum. One has to settle quantum and penalty appeal. If the penalty issue is covered in favor of the SSC by an order of superior authority, then one has to pay only 50% of the 25% amount. Even interest under section 221 of the Income Tax Act gets waived on settlement of dispute. We have already discussed that if there are two issues, you have only litigated qua one issue. Then interest and penalty qua the issue in respect of which you have accepted the addition will not get waived. Only issue which you have agitated, in respect of such issue, interest and penalty will get waived. Instead of filing an appeal, if an assessee files a waiver application before the competent authority, so there are provisions under the Income Tax Act under which you can file a waiver application. In such cases, you cannot settle under the scheme because no appeal is pending. So these are issues in respect of interest and penalty. Now you come to the TDS additions which have been made. Now TDS additions is a different ballgame. You have made payment to a party, failed to deduct TDS. As a result, an addition made under section 2011, you are treated as assessee in default, and interest levied under section 2011. Your appeal is pending before CIT appeal. You demonstrate before the CIT appeal that the other party has made the payment. So now you don't recover tax from me. What you can recover from me is only interest amount, as per the provisions of section 2011. In such cases, what amount one has to pay on settlement of appeal? The answer is such type of appeal should be treated as interest appeal, and you would have to pay only 25% of the tax amount. Second case, before the AO, a payment made to a party, no TDS deducted, but you demonstrate that the other party has made the payment of tax and therefore you are not required to be treated as the same default. AO in the order says that you are required to deduct TDS, you have not deducted TDS, you are assessing in default. But since the other party has paid tax, we will not recover tax from you. However, we will charge interest under section 201. You challenge this order before the CIT. Before the CIT appeal, you challenge the order on merits as well as interest portion. You want to settle this appeal. How much amount to pay? Since no tax is demanded from you, you are only challenging interest under section 2011A. This should be considered as an interest appeal and you should be required to pay 25% of the interest amount to settle this. If in respect of any payment made where TDS is not deducted, assessee is treated as an assessee in default under section 2011. And where such payment made is also disallowed under section 40A1A of the Act because of non-payment of TDS. So, this same addition, same tax amount is taken twice, one in a 2011 appeal and one in 40A1A appeal. In such cases, department has clarified that once you settle 2011 appeal, your 40A1A disallowance will go. We will not ask for any money in respect to your 40A1 disallowance. If you are settling your 40A1A appeal, then no amount will be claimed for that issue. If there are any other issues which you want to settle, then you have to pay tax only in respect of the other issue. When you pay tax as a deductor, the question is whether deductee will get the credit of tax paid. The answer is yes, he will get the credit of tax paid by you. However, in reply to question number 30, the department has clarified that he will get credit of tax paid only in this year in which you have paid the tax. This clarification is incorrect because under section 199 of the Income Tax Act, credit of TDS is allowed in the year in which income is offered to tax. So whether you have paid in this year or other year, it has to be allowed, the credit of TDS has to be allowed in the year in which income is offered to tax. Search cases, we have already seen that the limit of search is 5 crores. Now, an interesting issue arises because of using of the word any assessment on the basis of search under section 132. To give an example, Mr. Praveen Kumar Jain was searched. As a result of his search, certain incriminating information was found in respect of Mr. A. So Mr. A ka assessment was reopened under 148 of the Act and addition was made. Can you say that assessment in case of Mr. A is on the basis of search under section 132? The answer is no, it is not on the basis of search. Assessment of Mr. Praveen Jain is on the basis of search, not of Mr. A. Therefore, such cases are not governed by one, the exclusion clause under section 9, as well as the higher payment clause under section 3, where you have to pay 125% or 130%. Limit of 5 crores in case of such cases is qua an assessment year. So only those years where the limit of 5 crores are exceeded, you are not eligible to file. In other years, you are eligible to file. While computing this limit of 5 crores, you are not supposed to include the amount of interest and penalty. If you have not challenged the search, quantum appeal, but what you have challenged is the penalty levied in respect of search appeal, then in such case, firstly, the limit of 5 crores does not apply. 2, you are only required to pay 25% of the amount of the penalty and not 125% as in case of searches. Lastly, earlier there was block assessment 158 BD and all. Those assessments are not governed by Vivad se Vishwas. Those assessments are still to be argued on merits. We have seen that in case if the issue is covered by assessee's own case by the order of ITET or High Court, then you are giving relief by paying only 50% of the amount. What about a case where issue is covered by the assessee's own case by way of a Supreme Court judgment? In such case, the department has thankfully clarified that we will not recover any tax in respect of the issue which is covered by Supreme Court judgment because that issue is squarely covered. Take another example. The benefit of 50% deduction is available only if it is covered by assessee's own case. Now, I have a legal issue before tribunal, and such legal issue is covered by High Court's order in some other case. In such case, it would be very difficult because of the wordings of the act to argue that you only recover 50%. Ideally, they should have granted me some relief, but in such case, they have not granted me relief. So even if the issue is covered in my favor, they ask me to pay entire 100% of the amount if it is my appeal. This appears to be a big negative for going under the. So if it is only your case, you get a benefit of 50%. If it is covered by the order of some other assessee's case by a High Court or Supreme Court judgment, then no relief is granted. Similarly, the drafting of the such provision is that appeal pending before CIT appeal covered by order of ITAT or High Court, or appeal pending before ITAT covered by order of High Court. So appeal is pending before one forum and covered by order of a higher forum. There you get a benefit of 50% of tax. But what if my appeal is pending before ITAT and it is covered by the order of ITAT itself? So appeal is pending before one forum and covered by the order of the very same forum. In reply to question number 39, there is some relief which they are provided, saying even if it is covered by the order of the same authority, you can get relief of payment of 50% of tax. There are some filing issues and payment issues which one is facing. Firstly, one form for 1 year is the basic theme of the scheme. You have to file it online on your e-filing portal. What will happen in case where a company has got amalgamated with another company? The petition, the application of Vivad se Vishwas Act is to be filed in whose name? It is to be filed online. So there, my suggestion would be you file it in the name of the old company and write a letter to your principal commissioner or the AO stating that we have filed in the name of old company because the system does not allow me to write the name of the new company, but considered it to be filed in the name of new company. Most importantly, your appeal against 143(1) option is not available to settle such appeal under your Vivad se Vishwas application. So there is a drop-down menu for the orders under which the section under which order has been passed. So there they say 143(3), 144, 153A, 153C, 2011, but 143(1) is not appearing. I have been told that department states that 143 appeal against 143(1) order cannot be settled under Vivad se Vishwas Act. This is completely incorrect. It can be settled under Vivad se Vishwas Act. There is no option. There is no exception or exclusion available against the 143(1) order. One is not required to file the advance tax, TDS, and essay tax details in form number 1 in Part E, because in Part E, what you have to file details about is the tax paid post assessment order. There is one big difficulty which is faced by many assessees throughout India. Department has clarified that where 154 application has been filed, to first please rectify the assessment and then you process form number 1. So many cases, 154 applications are filed, but they are still pending. Until the time they are pending, one is not able to file form number 1 because how to compute the disputed tax after giving effect to rectification application or before giving effect to rectification application. Similarly, say for example, if the ITAT order is in my favor qua one issue, but qua other issue it is against me, I go to High Court. I want to settle the appeal before the High Court. In such case, the AO has not given effect to the order of the ITAT which is in my favor. So one issue which is in my favor, the AO is not giving order giving effect. So in all these cases, the disputed tax as per me is different, as per department is different. How to process? Department has been strictly asked to first clear all the rectification application, but because of the low staff strength and all the issues because of this pandemic, they are finding it difficult to clear all the applications. Going through your assessment records, which are stored at various places, they are finding it very difficult. In such cases, my suggestion is, since the time limit available to file the application is expiring on 31st December, you file the application if 154 application or your request has not been processed. While filing your form 1 under Vivad se Vishwas Act, while computing disputed tax, you write the amount of disputed tax as if your rectification application is accepted. Once that is done, let them come out with form 3. Mostly they will accept it. If they don't accept it, please reply to them that please clear my 154 application and then file the form 3. Form 3, which is passed by the CIT or designated authority, can be rectified as per the Punjab and Haryana High Court. So this is my advice. If time is less, 154 order is not passed, file your form 1 as if the rectification application has been passed, compute the disputed tax, and then file the form 1, and then you can fight it off with the AO later on. Because if you say that no, I will not file, I'll wait for the AO to pass the rectification application or rectification order, your time limit to file an application under Vivad se Vishwas Act will expire. So that option, one has to rule out. For making payment of tax under Vivad se Vishwas Act, you have to use your regular assessment tax challan with minor head 400 is what has been clarified. But what is important is, as per section 7, any amount paid under Vivad se Vishwas Act cannot be refunded, has to be forfeited. Okay. But how will the department come to know whether the amount is paid under Vivad se Vishwas Act or it's a normal payment under against the normal assessment demand? Because you have to use only one single challan for both of. There is no separate challan for Vivad se Vishwas Act. In such cases, say for example, form 1 and form 2 has been filed, form 3 has been issued, my demand is shown, I make payment of taxes by using my normal regular assessment tax challan. In such case, suppose I don't file form 4 or the process or application is rejected as void ab initio, department say no, we'll forfeit your amount because this amount you have paid under the Vivad se Vishwas Act. The answer is no, they cannot forfeit your amount, they have to refund your amount, they have to adjust it against the normal assessment demand, because this demand department cannot say has been paid under Vivad se Vishwas Act because there is no specific challan. It has been paid under your regular assessment tax challan, and therefore you can very well argue that this demand is not paid under Vivad se Vishwas. So this is the biggest blunder which the department has committed by not coming out with a Vivad se Vishwas challan. Under Vivad se Vishwas Act, for a particular year, if you want to settle it, you may have to pay a certain amount, but there is a refund which is due to you in some other year. Can you ask the department to refund, adjust the refund of some other year against the demand under Vivad se Vishwas Act? Technically speaking, the answer is no, there is no such provision in the act. Therefore, you have to make payment of tax and wait for the refund of the other year. If you're not satisfied with any of the orders passed by the designated authority, then you can very well file a writ petition against the same. Prosecution, immunity from prosecution. In one of the clarification earlier, the department had clarified that if a notice is issued, show cause notice is issued for launching of prosecution, but formal complaint has not been filed with the magistrate court, in such case you first compound the prosecution and then go for Vivad se Vishwas. The answer is no. Exception is applicable that you are not eligible to file under Vivad se Vishwas Act only in case where prosecution complaint has been launched with the magistrate court. Till the time prosecution complaint has been launched with the magistrate court, no prosecution is pending, you can very well settle your appeals under Vivad se Vishwas Act. Also, if quantum has been accepted and you are in appeal against the penalty order, once you settle the penalty appeal, you are also free of prosecution. In case where there is disallowance of carry forward of loss or depreciation, in such cases, one will have to look into various possibilities before thinking which option to select. Whether I want to pay tax in this year and carry it forward, or whether I want to not pay tax in this year and not carry it forward. So the first question which one has to ask is, if this loss has not been set off in any of the years, if this loss lapses, in such case, one can select the second option, not pay tax in this year and not to be carried forward for subsequent years. If this loss has been set off in year number 2 and there is no assessment or appeal pending against year number 2, in such case, my suggestion would be you pay tax in this year and let it be carried forward and set off in year number 2, because if you select the second option, then you don't pay tax in this year, but in second year a loss will be disallowed, carry forward and set off would be disallowed, in which case there will be demand in second year along with interest. You will also have to pay interest. Therefore, the better option is you pay tax in this year without interest, go for option number 1. The third situation would be loss disallowed in year number 1, which was set off in year number 2. In year number 2 also, AO has passed an assessment order, in which case loss set off has been disallowed, and you are in appeal against such order also. So there are 2 appeals pending, year 1 and year 2. Year 1 is the case where loss itself is disallowed, carry forward is disallowed. Year 2 is a case where loss set off is disallowed. In such case, you can settle either of the appeal and you can settle either of the options because there will be no interest liability. If loss has been partly set off and partly it lapses, then whether to select option number 1 and 2 will depend upon permutation and combination. Permutation and combination would be if you select first option, you would be required to pay interest, you would be required to pay tax in this year on the entire loss. And if you select second option, you would be required to pay interest qua the loss which has been set off. So you have to select which option is better and then you have to decide whether option 1 or option 2. What if department is in appeal? Then we have already seen 50% of the amount would be allowed to be carried forward, or 50% amount of tax you have to pay. The exclusions in case of search cases and in case of prosecution cases, only not all appeals qua such years are going, but only the particular appeal in respect of which 5 crore threshold has exceeded, such appeal is going. And in case of prosecution, only, so example, 143 order has been passed and the addition has been confirmed by tribunal, penalty is also confirmed. Against such order, prosecution has been instituted. Thereafter, 147 order has been passed and addition has been made, and against which you are in appeal before the CIT. Since prosecution has been confirmed in respect of your 143.3 order, you cannot settle your 143.3 appeal, but your appeal against the 147 order can be settled. It cannot, the department cannot deny you on the ground that prosecution has been instituted. Further, we have already discussed that prosecution institution means filing of complaint before magistrate court. There are various stages. Show cause notice is issued. You reply to show cause notice, and sanction is granted by CIT. Thereafter, complaint is filed. It's only when a complaint is filed, a prosecution is said to be instituted, and you cannot come under VSP. In such case, you can compound the offense and then come under VSP, but that option is not practical because compounding takes a lot of time. In many cases, we have seen that mostly in case of bogus purchases, once an addition has been made, an appeal has been filed to CIT appeal, and it has been confirmed and filed to ITAT, before even levying penalty, prosecution has been launched. As a result, what happens is, though you want to settle the appeal, since prosecution has been launched, you cannot settle the appeal. Now, such prosecutions are launched premature because prosecutions cannot be launched till the time your penalty is confirmed or penalty is levied. So, in such cases, my suggestion would be file an application to magistrate court for quashing of prosecution and file your form 1 application to department for a settlement of appeal. And if both are rejected, one can very well go to High Court and get it rectified. What should be one's stand in case of penny stock cases? Penny stock cases, many orders are coming in favor of the assessees. One may select not to settle the appeal, but if one feels that one is badly caught and the facts are absolutely against the assessee, then this is a very good option, very good made available by the department. You please settle your appeal, pay the tax, get rid of your interest, prosecution, and penalty. Bogus purchase cases, in most of the cases, 12.5% or some percentage is confirmed by the tribunal and department is in appeal. So high courts are not entertaining such kind of bogus appeals where an addition has been made on percentage basis, so you don't have to worry about that. But if you want to settle it, you can very well settle it. Say for example, AO has made 100%, CITA restricted to 12.5, ITAT restricted to 12.5, department is in high court. Now department is in high court for the balance 87.5. Department is saying pura 100% hona chahiye. If you want to settle department's appeal, you have to pay 50% of the tax on this 87.5% of the amount, which will be a very big amount. So this may not be advised because high courts are not entertaining department's appeal. Demonetization cases which have been made recently, in such cases, my advice is not to go for Vivad se Vishwas because the tax rate itself is 60%. Interest is a lesser amount of 2 years and penalty is only 5 to 10%. So in such case, one is advised not to go for settlement. However, the facts are very bad, then you may very well go and settle your appeal so as to get rid of prosecution. Lastly, unsecured loans and unsecured share application money in all those cases where addition has been made. Many cases are in favor of the assessee. But if one wants to get rid of litigation and one wants to take out that burden of prosecution, one can settle the appeal under Vivad se Vishwas Act and take the immunity. Yes, so this is from my side. I think we have half an hour for question and answer session.
Yes, thank you. Excellent presentation, sir. Any questions, sir? Members, please. Can you take from the chat box?
Yes, there is one question from Tiwari ji. Disputed tax and interest is already collected by the department from bank account before filing of appeal. Appeal is filed and is pending on 31st Jan 2020. Will the interest be refunded if we go for Vivad se Vishwas?
Yes, it will be refunded.
Okay, and
By what time I don't know, but it will be refunded.
okay, and continuation to the question, in case assessment officer has made error in the order by adding one income twice, then Vivad se Vishwas, which amount will be disputed tax, and amount with error or error needs to be corrected first by the assessing officer and then go for Vivad to Vishwas, or while filing the form 2 we can correct the disputed amount.
So the solution would be you file 154 application, call your assessing officer, pursue him, and try to get it rectified. If it is not happening before 31st December, then you file your Vivad se Vishwas application as if your rectification application is accepted. Compute the disputed tax amount only once. Don't compute the tax amount on the error part also, and then file an application and then wait for their reply. Once their reply comes, you can very well coordinate with them and ask them to first rectify their error in the order and clear off your rectification application. And once that application is filed, they will automatically change the amount which you will have to pay under the act. So your suggestion is first file 154, wait for it to be rectified. If not happening before 31st December, immediately file your form 1 as if it is going to be accepted, and then wait for their reply.
Okay, thank you, sir. There was just one question. I think all the other topics were covered nicely, so there are no more questions as such. Prajapati sir, you can take over.
Dharan, sir.
Yes, sir.
In case of bogus donations, AO has made the addition, CIT has confirmed, and now the assessee is in before the ITAT. Can he opt for this?
Yes, yes. Appeal is pending is on 31st January.
Yeah, it is pending before 31st.
Yes, you can opt for.
You can opt. One more query. Any other question, members? Sir, you have explained in a very lucid manner and covered all the possible possibilities. So members have understood it.
Thank you.
Now, Jitendra bhai, you are there? Khyati? Pratik bhai? Hello, Pratik bhai?
Tuba is not there. Khyati is online.
She's there? Yeah. Khyati, can I request you to propose a very well-deserved vote of thanks? Khyati?
Khyati, can you unmute yourself?
Yeah, she's there?
She is. She is the co-host as well.
Oh. Can you?
She has to unmute from her side.
Oh. She's there?
She is. She's the co-host as well. But
Can you call her?
just give me 1 minute.
Yeah. Hello, Khyati.
Yes, sir.
Yeah, please. You have to do the present task of proposing.
Uh, Thank you. Thank you. I'm CA Khyati Bharatwasani. Am I audible?
Yeah, you are audible. Very much.
I've been given the pleasant task of giving the vote of thanks to Advocate Dharan Gandhi. Thank you so much, Advocate Dharan Gandhi, for explaining the nitty-gritties of Vivad Se Vishwas on this bright Sunday morning. I am sure all the members who have attended today uh, appreciate how well you have explained all the various sections, also covering Indian Penal Code, the disputed tax, search and survey proceedings. So you've gone into the details of everything. Thank you so much for explaining it all to us. I, on behalf of President CAMD Prajapati, sir, and other committee members of the Malad Chamber of Tax Consultant, thank you for conducting this session. I hope we'll have many more of these in the coming year. Thank you so much, Advocate Dharan Gandhi.
Thank you so much.
Thank you, Dharan Bhai,
Thank you, Prajapati. Thank you.
for your valuable time. In spite of Sunday and your busy schedule, you have spared your valuable time. Thank you very much.
Thank you.
Again, catch up. Thank you all the committee members for giving full cooperation. Thank you once again.
I'll end the webinar, sir.
Yeah, please. Cool.